All right, welcome back, guys. Welcome to the 5ers Live Trading Room. How's it going, everyone? How's it going, Alex? Muted, probably muted. Anyway, today we're gonna be doing some macro analysis.
Bitcoin.
Yeah, we're obviously going to be taking a look at Bitcoin as well. I'm going to be looking at some on-chain analysis for Bitcoin. I'm going to start planning an exit for Bitcoin because we're getting close. We're getting close to the top. So I think it's time to start looking. Like we talked about yesterday. Not with you though, but with Victor. Talked about the state of the market and how we want to look for that euphoria,
Mm-hmm.
What's up, Louis? Louis? Not Louis. It's Louis. It's got Louis. We've got Lack, Russell, Dumaya. Let's see if I can find a name that I can pronounce. Got Tony, Zags, Hamid, Ted, Bet Alex. Huh.
Bet
Alex. Interesting. Got Dean, Martin. Lots of people in here. All right, welcome everyone. So today, as the title suggests, it says the 2025 game plan Trump, dollar strength, and crypto strategy. So the Trump trade, okay? Obviously, there's a quite an obvious Trump trade. I'm gonna show you what that is all about. Okay, we're gonna switch to Bitcoin. This right here, this is the Trump trade. Bitcoin has performed so incredibly well after the elections. It's just stupid, right? It's just insane. We what's the high of the day or the week? Well, actually, it's today. It's the high on Bitstamp is 89,983. So right below 90,000 on Bitcoin. That's just absolutely insane. Been yeah.
It's got up there quite fast. It's got up there a little bit too fast because it's left a lot of people sidelined. It's left me, still sidelined. Obviously, I've got most of my positions in, but I've still got a quarter of my portfolio just sat in cash, which is kind of annoying, and it's not really giving any kind of pullbacks that allows us to actually get into some of the rest of the altcoins and stuff. It's kind of frustrating, but who cares? Everything's still going up, so as long as you've got some, exposure.
Yeah, definitely. So I want to update you guys on, for those of you who were not here yesterday when we talked about the overall idea about the correlation that we're currently seeing with USD strength and risk on assets. So we can go to the where do we have that one? So it's going to be this one right here, and the correlation is still going strong. You see that you have the dollar currency index being the. Let me remove some indicators here. Bit of these. Okay, so you have the dollar currency index in blue, and you got the S&P 500 in red, and you can see that the correlation here is quite strong. The correlation started, before the election. Actually, you had the correlation starting at the end of September. But if you zoom out here, you see that there's a fairly clear inverse correlation between these two assets, or well, I guess the dollar currency index is not an asset, but these two charts. You said a drop in the actually could say there's actually a positive correlation between this drop as well, but you can see, of course, here when the S&P 500 starts a move to the upside, the dollar currency index starts a move to the downside. Of course, it kind of picks up here, but overall, you'll see that there is an inverse correlation between these two assets. And if we go back to November the 5th, 2016, you have the election results here. And again, you see the positive correlation starting right before the elections. See a move to the downside on both, and then a move to the upside, and then around the date of inauguration, you have this correlation breaking, basically. And we can zoom out here, and I think it's quite obvious here where this is where the correlation breaks, obviously, and becomes quite obvious that the S&P 500 continues to the upside while you see massive dollar weakness. So that's the trade, or that's the relationship that I'm basing my current trades on. So if we go to Euro USD, you see a weakening of Euro USD, and I'm expecting to see, you can go to the weekly here. I am expecting a bounce here. Now, of course, we talk about dollar strength, right? And when talking about dollar strength, we have to look at the dollar currency index. And the dollar currency index is pretty much Euro USD inverted, because the dollar currency index is about 60%, I think specifically 55% of the dollar currency index. So it's like about 60% of the dollar currency index is Euro USD. So we can actually add we can do it like this, and I can show you exactly what I mean. If we add the dollar currency index at the bottom here, you'll see that it's pretty much the same chart, but just in reverse. Zoom out. You can see it's very clear here. So the support that Euro USD is testing right now is this one right here, and that's the resistance of the dollar currency index. The 618 here is the 618 here. So it's basically the same chart, but in reverse. But there's small differences, right? But that's the overall idea that I'm thinking that euro will continue to the downside while there's dollar strength. We also see in the eurozone, we see weakness. We see weakness from the pound, and we see weakness with the German economy. And I'm expecting there to be a lot of uncertainty with the eurozone leading up to the German elections in February. I think that's gonna be the federal election in February. So I do think that's going to be uncertainty in the eurozone and dollar strength up until inauguration. A lot of people are saying that like this is the year of the dollar. Well, next year is the year of the dollar. I'm not so sure about that. I think it's the year of Bitcoin. It's the year of risk on assets. I don't think we're going to get a dollar boom in the way that we're seeing right now. I think this dollar move will end just like it did in around inauguration, because I think that everyone is expecting dollar strength right now. We're not seeing dollar strength because of implementations of the Trump administration, because they're not in office. When they actually do get in office, I don't think we're going to see that dollar strength. Everyone's expecting the tariffs to be like the most wonderful thing for the U.S. economy, which I don't think that might not happen. So I think we're going to see the same relationship, right?
Tariffs normally get pushed on as well to the next person. So like if you're a country that's suddenly getting tariffed on a certain export, then maybe you're just going to put that onto your price, which is what everybody does.
Yeah.
You pay,
long term though. I mean, I guess. I mean, I'm not. Obviously, I'm not the president. But if I would be the president, what I would do is I would put tariffs on importing goods where there's a good alternative within the country, or if there's a alternative that can be long-term manufactured within America. Like if you put tariffs on coffee, that's not going to do much, because obviously that's going to increase the price for the consumer of that coffee, because the importer of coffee is going to put, add the tariff cost on the customer, and that's just going to drive inflation higher. But if you put tariffs on the vehicle manufacturing industry, that might drive America to start producing more of the things needed to produce the vehicle, and that could see a boom of the Detroit vehicle area, right? And things like that might help push the American economy. But if done wrong, it's just going to push inflation higher, which inflation higher also means dollar strength short term, because that means that the Fed is going to get pressured to raise rates, which is of course going to make the US dollar interesting, because now the US dollar has higher yield.
The only thing I would say to that though is currently, after I think a couple of months ago, they had really, quite a bad jobs report. Like there was a lot of unemployment, and there's things that are starting to break in the US and people without jobs. And so I think they are under pressure as well to cut rates as well. So
yeah,
cutting rates in general, the UK started cutting rates. You've started to see the US cutting rates. And if that's happening, well, you're going to see obviously a weakness in the currency and more risk on. Now, obviously, Trump being in the presidency, people are more looking on risk on. They know now what to expect. They, rates are coming down. Money's becoming less valuable because people are the Fed's actually printing more money all the time, as they call it, liquidity into the market. So the only thing to do is, instead of sitting there and doing nothing, you might as well put it into the markets. And you can see the market is on every single asset class at the moment, which is risk on, is just like going absolutely crazy.
Yeah, no, it is going absolutely crazy. But this idea with dollar strength and the S&P 500, there being correlation, obviously means that we can put money in risk assets while also going long the dollar, which means shorting your USD, where we had a beautiful break to downside, which also means the dollar currency index going from range low to range high, and we are approaching that range high now. So I'm starting to look at potentially taking profits here for USD. Looking at the GBP USD here as well, I'm looking to see that move down to this support level, and this is also based on the fact that the UK economy is pretty much shit. I mean, after the new government took power, they've it seems like they're not like they're not economy. They're not full of economy professors in that government, to say the least. They're killing the pound, right, as it looks like right now. And with dollar strength, we're getting pressure to the downside. And of course, also if we look at gold, now what we saw in gold is we had a parabolic move. Now what you can do is when you measure parabolic move, you can put on like parabolic trend lines, where if you put trend lines off the trend line after trend line, you see that it's just getting steeper and steeper and steeper and steeper, and eventually that trend line will break. And those trend lines broke around this area. I think that should have been the first sign of saying like, okay, we have a break of the parabolic trend. And then of course when we had that massive move to the downside with dollar strength, we could assume that, okay, so this could be at least a local top on gold. So I am looking at gold to reach this level, this support below. So I'm currently in a short here, and I've added to that position as well. And then I've opened a new position on USD CHF, and this is based on that weekly outlook of seeing a we've been in this trade for trend for quite a long time for USD CHF, and whenever there's dollar strength, you do see a cycle between range lows and range high for this asset. So I'm betting for more upside potential for USD strength. And then another trade I'm in is a risk on currency. Now that's AUD/JPY. Usually AUD/JPY performs well in a risk on environment. So if we're going to continue to see this relationship, I do think that AUD/JPY will move higher. I would have wanted to put a position on for a long on USD/JPY, but we've been trading too high. Basically, I think AUD/JPY is trading down in this area, and USD/JPY has already made a majority of that move. So that is the positions I have open right now, and I'm starting to look at taking profits. And I wanted to show you guys something as well. I've been working on setting up a chart layout for the VIX, to use the VIX as a way to look at sentiment. So for those of you who do not know what the VIX is, this is basically I guess you could call it an index. It's a way to look at something called implied volatility. So, and it's calculated using options prices for the options market trading the S&P 500 index. So imagine that you're a market maker or a brokerage or whatever that is selling options, right? And the higher the implied volatility is, so if that market maker is seeing that there's a lot of orders coming in for options, he might be thinking that, okay, so these people piling into these options might know that something is happening, there might be a big move coming, so the prices of those options goes up. Now that's just a very simple way of explaining it, and that is reflected in the VIX. So when there's low implied volatility, we're in low numbers on the VIX, and when there's high implied volatility, we're in the high numbers, which basically means that low numbers, people are not expecting a major move, right? And that is considered to be a stable market. And as we know, stable markets are more of a risk on market. And then when the VIX gets elevated and it goes up to the highs, you could view that as sort of a risk of environment. And this index, or the VIX here, is also called the fear index or fear and greed index, which I believe a lot of the fear and greed indicators that we know is based on this. So right now the VIX is quite low, and what's interesting here is you can actually put on things like the S&P 500. And if you put on the S&P 500 here, you can see that whenever we go up into you can look at, for example, the high here on the VIX is a low on the S&P 500. A high here is a low here on the S&P 500, and a high here is another low on the S&P 500. So there's a very obvious relationship between the VIX and the S&P 500, obviously, because it's calculated using the S&P 500. But you can also add other things on here, like Bitcoin. You can add Bitcoin, and you can look at, for example, what's the relationship between the VIX and the Euro USD chart. So it's a quite interesting way of analyzing, using technical analysis on charts like this as well. So I do recommend that especially if you're a swing trader, if you're trading the Forex market and you're a swing trader, take a look at the VIX on like a daily basis, and just note on where it's trading, and then try to maybe do some analysis on what happens on a specific currency pair when we are at the highs, which would be like above 25, and then below 20 is generally considered a low volatility, and then try to see how they affect each other. It's can be very useful. Now, another thing I wanted to show you guys is because we're talking about the macro outlook, and I'm going to be looking at some monthly charts after this, see if we can look at the overall, like what happened last time Trump got into office or when he got elected. We're going to be looking at the monthly chart, look at 2006, 2007 when he got into office, what happened in the next 4 years, and can we find patterns that might be tradable? Because it would be very interesting to be able to open trades at the beginning of the year and then perhaps keep portion of that trade open. Maybe I'm just going to get killed by swaps and everything, but see how that developed throughout the year. Now, one interesting way of looking at the let me explain what I'm trying to do here. The way I'm trading when I'm swing trading is I'm trying to get an understanding of what is the risk sentiment going forward. Are we going to see risk on? Are we going to see risk off? And what is the dollar doing? Are we seeing dollar strength? Are we seeing risk off or whatever? And I'm trying to find technical tools to look at sentiment. So it's not really, it's macro analysis, but it's not fundamental analysis. I'm not looking at the news. I'm not trying to, break down news events and anything like that. I'm trying to look at technicals and what can the technicals tell me. And one way to do this is to look at bond yields and bond yield spread. So we can show you an example. Let me open up a new chart here.
So you're looking at if the bond yield goes down, that's more going to be risk on for risk on assets like stocks, stuff like that, because the yield to hold the bond, the underlying asset, which is the dollar.
Yeah. So maybe we should explain what a bond is. So basically, let's say a government bond, the government bond, the U.S. Treasury bonds, for example, the 10-year Treasury bonds. It's basically it could be used, for example, to fund public products. And the government sells bonds. People buy bonds, or investors buy bonds, invest in that, and they will in return get the get the yield or the interest rate on that annually as exactly, and then at maturity they'll get the principal back basically. And if they're lucky, I mean, because man, last year we've seen that some of these government bonds, the interest rates, they were losing money basically, and that was a huge major deal. That's where we saw, for example, the Silicon Valley Bank collapse, the crypto bank collapsed because of that. They were holding so much debt that they were just losing money on the interest. But basically, that's just a
when you buy debt or government bonds, when the yields are really low, the underlying price of the bond could be quite expensive. When the yield goes up, because let's say there's a lot of inflation, the Fed turn around and say that they need to curb inflation, so they have to raise yields. Once they start raising yields, the yield of the bond goes up, but the actual bond itself, the value of the bond goes down. So eventually they can start losing a ton of money. Now, if they're still, getting payments on these bonds, maybe the rate of payment still isn't enough to cover the losses that they lost from actually buying the bonds itself. And that's when you're actually losing money. Probably the best time to buy bonds is probably when the inflation is inflation is quite high, rates are really high, and you buy bonds, and then when the inflation comes down and they start cutting rates, the price of the bond actually goes up, and then you can sell your bonds for profit.
Yeah, I'm
a basic play that I know of.
Yeah, the thing with bonds, though, the people that are buying and selling bonds, we're talking about massive amounts of liquidity. We're talking about huge amount of money. So when people start losing money on bonds, it's not fun. It's not fun. I can see institutions going bust because of that. It's just insane. But yeah, I'm not an expert at actually trading bonds, but looking at the bonds. And it's quite interesting. So we can do this. We can type, if you go to TradingView, we can type in US 10Y. That gives us the United States 10-year government bond yield. And the 10-year is used as a benchmark of sorts. And then if you want to compare this to, so this is the yield. This is how much you're getting on the 10-year, right? And now we can compare this to the German bond market. So we press the plus here, and we type in the DE10Y, and here we get the German 10-year government bond yield, and we can compare them to each other right here. And as you can see, if we see a deviation, which for example we can see right here, that the German bond is going down while the US one is going up, there's a deviation here, and that's the spread between them. That's the yield spread, right? And this could tell us that the economy Europe is not doing as good as the economy in the US, which means basically we want to short EU, we want to short the euro, and long the dollar. Now, this is one way to do it. Now, the better way to do it, in my opinion, is by doing this. You type in US 10Y, and then you do a minus sign, DE 10Y, and that gets you this. That shows the spread. This is now the yield spread. One line is the difference between the US 10-year and the German 10-year. And as you can see here, the US 10-year is outperforming the German. Now what you can do is also you can start, instead of adding the US 10-year first, you can start with the German one, and that's what I've done here. And what's interesting is, so this is the German government bond versus the US 10-year, and this is the difference in yield. This is the yield spread. Now, so this is what usually what people do. They begin with the US, and so you have this. But what happens if you add to this the Euro USD? Because Euro USD is the currency currency example of this bond yield. So if we add your USD to the chart here, you will see a correlation. Okay, quite obvious correlation. If you know, but there's a difference here. Now, how do you use? Now, of course, we can do this type of analysis, but we need to ask ourselves, how can we make money on this? It's not just about doing the analysis. It's about trying to actually do the analysis here and make some money. So the blue line is the yield spread between the German bond and the US 10-year. So what we can see here is obviously upwards trending market. Same for Euro USD. We have an upwards trending market. Now, obviously the trend line is not as obvious, but we can something like that. We can add another trend line here as well, but you see clearly that there is an uptrend on both of these. Interestingly enough, the move lower happens on the yield spread before it happens on Euro USD. Okay, so there is an edge here. It happens before the drop on the euro, and you also see that there's perhaps some sort of deviation here. If you're looking at the yield spread, you have very clearly higher highs and higher lows, a very clear uptrend, and on Euro USD you quite clearly have a double top right here. When forming that double top on Euro USD, you're also breaking the trend on the bond yield. Okay, quite interesting. We can also do some analysis here by putting on a horizontal support and resistance here. When the bond yield go lower here, it breaks the trend. We now see that Euro USD follows. That's the top on Euro USD, and it happened first on the bond yield. So there is some edge here. Now this is how you can, because for me personally, I'm a technical analyst. I'm not a fundamental analyst, but basically the way we're analyzing the chart here is the bond yield obviously very much affected by fundamentals. So it's almost like we're doing fundamental analysis by using technical analysis. We're not just looking at price action on a currency pair. We're applying different markets into our overall idea to create a bias. So remember what we started with. We started with looking at the correlation between dollar strength and the equity market, dollar strength and the S&P 500. We're combining that with the VIX. We're looking at the implied volatility. We're looking at is investors, expecting, are they fearful or not, basically. And then we can look at the bonds. The bond spread, right? And that can create a bias. And as you can see, it's front running. So now that's an historical example. Obviously, as traders, we want to make sure that we actually capitalize on the opportunities and we start making money. We can see that the bond yield has broken down today, broke the lows right here, and Euro USD is continuing higher. It's definitely, following each other right here. But what if there's a clear deviation? Like, let's say in the next couple of days, we see Euro USD hitting perhaps, hitting these lows. And when Euro USD is hitting these lows, we might see something like this. If we start to form some type of uptrend on the yield spread, but Euro USD is lacking behind, this can be one confluence needed to close the positions. Okay, if that happens at the same time as the VIX is rising, we have another confluence on that. And if for some reason this correlation does not hold true, you go back to current prices. This is where we are right now. If the S&P 500 continues to the upside, but the dollar currency index starts trading lower, the idea that I've been trading is invalidated, and I will then have to close all the positions that I currently have open based on this bias. Now, another thing that I've been looking into to form a bias going into 2025 is the commitment of traders report. And that is very, very powerful. And I'm surprised that not more people are looking at that report. I want to know in the comments, is everything that I've covered here, is it so far, is it clear? Is there any questions on anything like this, or anything that you want me to look at, or any questions on this, how to apply it? Because I do think that when done correctly, this can be insanely powerful. Still, you're muted.
I made a joke. I'm not going to repeat it.
Let's see if we have any question.
So took 2 losses this morning, and now I got a win. I'm recovering some of the stuff back. Now I'm getting into a long on gold.
You're going long gold,
which is an intraday trade. I don't know if I'm going to get back in. I'm looking for it to take out that high and then possibly come back down for another leg down. So I just got out of a position right now, just from that initial move. I'll just shut my screen actually while we're waiting.
I think if gold is coming down lower, I think this is a really good entry for short.
I think gold's going to come down lower eventually.
Yeah.
I've taken some really nice trades on gold recently. It's just been so nice to trade. So this morning I got taken out by that. I've got back in and just taken that trade. I think I've just missed that by a pip. Look at this though. This is from the other day. Look at that.
Dude, have you been more profitable since you put on the glasses?
Yes.
Yes.
I've still got out. Look at that position. I still made a nice profit, but look at that. Seriously.
Yeah, that was nice.
I trailed my stop like an absolute idiot. Don't know why I've started trailing my stop, but then it just absolutely melted afterwards. Also had this really lovely trade here, which was on gold as well, which just filled all of that. I also had this short right here, all of it with nice size as well.
Nice.
That was Trump actually. That was the Trump short. I'm going to call that the Trump short. Then that was the Trump long. And now we're waiting to get into the normal long.
So we have a question here from Russell. What about bond deals between EU zone and the UK? Yeah, I mean we can look at that. I mean it makes perfect sense. So let's here.
Gosh.
The what?
No, we're just talking about the guilds. You know, the UK guilds. I don't know who'd want to buy bonds in the UK anyway at the moment.
Well, I guess it needs to be quite cheap. Because we're gonna look at the UK 10-year and the German 10-year, and that gives us this, and then we add GBP USD. Okay, that was not how we should do it. Okay, add GBP USD to new price scale. So here we see obviously something quite interesting. There's a heavy. No, this is GBP USD. Okay, GBP Euro, because he said Euro GBP, right? That's right, Euro GBP. Okay, so now there's going to be inverse correlation here. So what you want to do here is you want to look at, man, what am I doing? I'm doing everything wrong here today. Okay, so what you want to do is you want to look at first DE 10-year and compare it to the GB 10-year. And then you want to be adding Euro GBP. There you go. Okay. And now we see the correlation here, right? Even though it's not super obvious, they're still kinda following each other, but there's this relationship is not as obvious. But what we have here is obviously the German 10-year and the UK year.
Right, I've long gold again.
Nice. Yeah, I haven't really looked at this relationship. Let's compare it to that one. Let's compare it to here we have the German bond yield versus and then we have Euro USD on, and you see that there's a very clear correlation here, very clear correlation. If you look at the German and the UK, I feel like the correlation is not as obvious. Try to get it here. I mean, there's something here, but you can see that there's a big spike on Euro GBP here. I mean, you can see that it goes up because Euro GBP is the red line here, and it basically goes straight up while the bond market is continuing to fall. So let's look at switch to candles. Can we should be able to look at that from a candle perspective. Guess what we have to do then is we have to look at Euro GBP, and then we have to add
Guys, I'm new to the FX market. Can you please explain what a bond yield is in relation to a bond yield to the currency pair? So a yield is what you get as an interest on the principal that you put to buy the bond. So you're effectively giving money to an entity, could be a company, could be a government, and they basically pay you a yield or an interest on the money that they've taken from you. Now, if interest rates go up, then the yield goes up, and the inverse happens with the bond. The bond actually, the principal of the bond actually goes down, but the yield actually goes up. So I hope that that clears that up.
Basically, what bonds are.
We should get an actual bond. We should get an actual bond trader on to actually talk about bonds, because they are super liquid, and they're super nice trades. Alex, I have a setup in cool. Every month I can get 50% equity in 1 to 2 every trade. That's nice.
Nice. Okay, so here we have the bond yield, and what you see is Euro. And I need to figure out this relationship here, because as you can see, there's clear. We can see clear.
Yeah, bonds. I don't think so. Bonds are exempt from taxes if they get to the expiry. not the profit though. If you sell a bond, I think for a profit early, I think you actually have to pay capital gains in the UK, if I'm not mistaken.
Yeah, I think there's I can't remember exactly, but I've just read up on bonds somewhere. I can't remember, but you can see that
one book somebody in the audience told us to look at, and it's super interesting. Don't know if it's too much about. It's got a little bit about bonds, but it's more about money, how money and the Fed work. Is the Lords of Easy Money, I think it was called. It's actually a fantastic book, and
you read it.
I started reading it. Obviously, I can only read a little bit every single day because life gets in the way. But it's a super interesting book. It talks about how the Fed basically used quantitative easing to pump money back into circulation, and then basically banks go and buy different bonds from government. It's just a big mess, but it gives you a bit of a understanding of just the financial system, especially in America. And then that could get you interested in bonds, and then from there you can just ask ChatGPT what bonds do.
So it's interesting here because we do see that there is correlation between the yield spread here, and when I say yield spread is I compare two yields of two different bonds, and then the difference is the yield spread. And if so we see an upwards trending yield spread means that the you're getting more yield from the German government bonds compared to the UK one. But we can see that there's correlation here. So we have a high and a high. So down move, a bottom and a bottom, and then a move up and a move up. But this is interesting though. When that move up has happened, there's a huge move to the upside on Euro GBP, but not a big move on the yields. That one comes later. So this move up, and then that move up, that's the top, that's the move down, and then that's the move down. So here, the currency is actually front running the yield spread, and you can see that that's quite interesting. That's not what you get on if you compare the German bond versus the US bond versus Euro USD, because here you have almost a perfect correlation when it dips. So obviously, like with everything in technical analysis, when you're looking at different assets, it has different characteristics. Okay, so there's going to be it's not always going to work for everything. There's going to be specific characteristics of specific bond markets and correlation with different currencies that are not always going to be perfect. But here on the German bond versus the US bond, obviously the correlation is quite clear. And here you see that the yield spread is a lot of times front running the currency.
When you said the yield spread is just the difference between the one yield of the one bond and the other yield of the other bond. Correct?
Yeah.
Okay.
So here is German versus US, and if it's trending down, that means that the yield on the German bond is lower than the US one. And okay, so something else I wanted to show you guys. Yes, that's the commitment of traders report, and so in the US. The CFTC requires traders that have a portfolio worth over a certain amount of dollars. Now, I don't know what the amount is, but it's quite big. So basically, you could think of it as institutional traders, basically smart money, or you also have retail traders that are managing a lot of money also had to report their holdings. And basically what they do is once every week on Friday, the report gets released. So everyone reports on what their positions are. I think this came after Bernie Madoff, that whole situation where they required people to actually tell the CFTC what they were holding. So that report comes out every Friday, but it's based on Tuesday. So the Tuesday, the close on Tuesday, and this is based on future positions. So the report gets released on Friday evening, our time, and it comes out once every week. And there you can see what the so-called smart money, how they're positioned. And it's a great way to use in your analysis as a swing trader, because it gives you an idea of how were the large traders positioned last week. So I figured we're going to look at that. There's a few websites that you can use to look at the commitment of traders report.
Yeah, boy.
And here is one.
Look at this. What is this?
Yeah.
Hello.
Yeah, that looks pretty good, man. This is a website called Market Bulls, a very original name. It's a Market Bulls. And then you have other websites, like, for example, this one, which is Trading Stir. It's I figured I could show you here what happens. So this is you see that they have to report their holdings on a lot of different things, like currencies, grains, livestock, stock indices, treasuries and rates, energy, lots of different things. We're interested right now in the euro. So this is we can. Well, I want to look at euro, but we can look at Bitcoin as well. So
yep,
you have two different reports here. You have the COT legacy and the COT. So this is the legacy is basically giving you. It's divided up into three different categories. I can't remember exactly what the three different categories
institutional, commercial, and lower investors. I think it is. It's definitely institutional, commercial, and something else.
Yes, and then it's non-reportable, which is like traders with lower capital but could still. And then the COT is the more detailed report where it's giving you different. So here, for example, you can see that it's divided up into dealers, asset management, and institutional traders. So this you could call this smart money, right? The asset manager and the institutional traders, and then you have leveraged funds, other reportables. Can't remember exactly what that is, and then non-reportable positions, that's smaller traders. But if you look at Euro CHF, so this is from last Tuesday. Now, what happened last Tuesday? I don't know if you guys remember. In the comments, let me know what happened last Tuesday. Let's see if anyone remembers. I know that the market has a pretty not the best memory in the markets, but I'm sure most of you remember what happened last Tuesday. If you asked me
what I did last night, I would not know how to tell you. I totally forgot what I did last night. You think I'm going to know what happened on Tuesday?
Well, on Tuesday you had the Trump the elections, right? Trump, yeah.
Oh, that
you really forgot about that.
That thing.
That's hilarious. Anyway, so this shows us how, for example, how the asset managers were positioned on the euro, which is very interesting. They're about 70% long. Yeah, for some reason the dealers are 88% short, which I have to kind of like I need to understand.
Don't they take the other side? If a dealer, don't they have to take the other side of the trades? I'm not too sure.
That's the market makers, right? I assume that this is sort of a type of market makers, right? So I'm looking at the asset managers because I'm interested in the asset managers, right? And they last Tuesday they were long. If they are still long, with the Friday report, I'm selling Euro USD. Because imagine that they did not switch bias because of the election. Now they kind of have to. Everyone, like, because if the report comes out on Friday, which is, so it's today, the next report shows us the position that people have today during this live stream. Now you look at Euro USD. Switch to trading view. If institutional asset managers are still long Euro USD after the election results and after a move like this, I'm selling. I'm buying. I'm getting out of the position. I don't want to be trading against the hedge funds. You know, I don't want to be trading against the best traders in the world, JP Morgan. You know, there's no reason for me to take the other side of their positions long term. Do you agree with me?
Mate, I'm chilling on the 1 minute, 5 minute. I don't care, man.
No,
Let
but I
them
mean,
do what they want. Do you know? As long as they're all long Bitcoin and they're all packet, you know, which, to be honest, you know, you got big T and big E, you know, pumping Doge and pumping ADA and all of that stuff. I don't care what they do with the euro. Just as long as look, it all depends for you, because you're looking at 4-hour dailies, weeklies. For you, this is super important because
that's what I'm saying.
That side.
That's what I'm saying.
For day traders, I'm just looking at a level of support, a level of resistance, a reaction on that level, a break, retest, top of a range, you know, exit at 200 EMA.
Now, this is a really good. This is a really good comment right here. It's the problem with that is we don't know their timelines, and that's the overall problem with the commitment of traders report. And this is why you're not supposed to be using only the commitment of traders report. You have to be using also. You have to be looking at the yield spread. You have to be looking at the VIX. You have to look at the dollar strength. But now we have the dollar currency index coming up into a resistance area. If the overall asset managers are still long EU today as they were and the election results, that means that they are not betting on more dollar strength, and there hasn't been any shift between what they thought last Tuesday on the election and today. I'm expecting there to be a shift. There kind of has to be a shift. So it's going to be very interesting on Friday to see what is happening. But, you know, I mean, looking at this position that I'm in right now, it's I mean, I'm in 200 pips profit. It's time to look at an exit. I mean, the target is I'm trading my stops down, but the target we're talking about a 600 pip move to the downside. It's going to take a long time. I'm expecting this to take a few weeks. You know, I mean, this pattern that I'm trading is supposed to be playing out till inauguration, which is the end of January. So it's about 3 months.
It'll be interesting to see where that goes. A lot can happen in between that. Reason why I don't like holding on to positions like that in Forex is just because so much that can happen that can take you out of those positions, and I just don't like holding on to that kind of those big positions like that. No way. What are they saying? What are they saying for the commitment of traders for Bitcoin contracts?
Right. That's actually very interesting, because now they have to report on Bitcoin as well. Now, when I traded, when I started trading Bitcoin, nobody had to report anything on Bitcoin, you know. But now you have institutional investors actually. Yeah, look at this. Everyone's is long, except the leverage.
See, now for me, this is super interesting, because if you've got institutionalized funds that everybody's trying to short this at an all-time high and are getting wiped out, and especially if they're using leverage, I'm not surprised why it keeps pushing higher.
Yeah. I mean, if these people got stopped out, we got like how I don't know, like I don't really understand this with the leverage fund, like what this really is, but this is crazy. Like this is, to me, it's 87% short with leverage. Maybe that has to do with hedging. I don't know. But you look at asset managers, 95%, almost 95% are long. This is last Tuesday. Like they made so much freaking money on this because Trump won. This was prior to the move that we're seeing right now.
Hold on, mate. You got a tear on your eye.
Yeah,
a tear of joy.
That's just insane. Just insane, dude. And then we have, let's see if we can find open interest here. That would be interesting. So positions long. This is obviously we got the asset managers here.
Open interest. If open interest is really high and price is moving up, well, there you go, isn't it? It says it all. People are still buying. People are still going long. Super healthy trend.
It's going to be interesting to see what the commitment traders are saying on Friday. Well, I guess we'll talk about that on the Monday live stream, but it's going to be very interesting to see because I do expect that not as many are long. They made a shit ton of money on this. They're probably going to be exiting some of the positions, but who knows? I mean, it's going to be interesting to see. But they really did get the move right on Bitcoin. What else did I wanted to talk about? Let me bring up something else here.
I'll talk about the elephant in the room that we talked about Dogecoin like 3 weeks ago, that it was like breaking out and now it's like gone up 500%. It's not obviously because of our call, yeah. We didn't move the market. Right?
But yeah, we're gonna look at that. First, I just want to look at some on-chain metrics here for crypto, which I think is very interesting. So we can look at this is a chart called the NUPL, which is the net unrealized profit and loss for Bitcoin. It's a very good indicator to use when looking at the tops and the bottoms for Bitcoin. So we can see here that we have. Here is the March top, and then you have the breakout right here, and we are trading quite high. Okay, we're trading at a level where we're starting to get into that greed and euphoria section of the move. Okay, which is important to remember. This is a website called Crypto Quant, where you can get a lot of different on-chain metrics. We can take a look at, for example, it's not possible to get the commitment of traders real time. If that would be possible, I would not give it away. But you're not.
In a way, though, you can if you have like level 2 futures software where you can actually just see what the open interest is and what price is actually doing, where people are bidding and stuff like that. I know it's not obviously giving you details of what each sector are doing, but it can show you live where people's orders are, what people are doing, how many contracts
you're right about that. How come I did not realize that? You're absolutely right about that. I need
TPO order flow charts.
Yeah, I'm gonna make a note on that.
Yeah, I used to use it a lot for crypto perpetual futures trading on the 1 minute. And then I need to look into that. Using way too much leverage and my stop losses were way too tight. I used to just get absolutely beaten.
Yeah.
Just all the time. especially if you're trading as well low float coins as well, you with high leverage, you could move. If you're trying to be on the 1 minute, you can actually end up moving the market in a way, and you can just get in some really bad positions if you're not using it carefully. So
yeah, sometimes I'm getting DMs on Twitter for products asking, and I don't do this, I don't do this, so you're not going to see me do that. But you guys understand how it works on Twitter. So I'm getting a lot of times, I'm getting DMs, especially now with the bull market and Bitcoin moving higher. I'm getting DMs from smaller illiquid meme coins, basically saying like, okay, you get a certain amount of our circulating supply if you tweet this and that, and basically if I accept that deal, I'm able to just dump on market and absolutely kill the product. It's crazy. I mean, it's just insane how they can really affect the market. Anyway, so here you can look at the exchange flows on Bitcoin. Now, one interesting thing to look at is now if you're holding Bitcoin, if you're holding massive amounts of Bitcoin, you're not going to be holding that on an exchange, because remember, FTX, not fun. I mean, you don't want to be holding Bitcoin on. If you have massive amounts of Bitcoin, you're not going to be holding that on an exchange. You're going to be holding that in a hardware wallet or a cold wallet. It's the same thing. Hot wallet, exchange, cold wallet is a hardware wallet. So, and then when you're going to sell that Bitcoin, you obviously need to transfer that from the wallet to the exchange, which means we're getting a metric called exchange inflow. Okay, so we can see if we can find that. We search for inflow. And what you have here is you have exchange inflow. So let's do the total. Here you have the exchanges, the inflow for all exchanges. You can change spot exchanges, derivatives, whatever, all the exchanges here. And you see here in green, so the green is the inflow. And what's interesting is on this move up, we had at every top, we had exchange inflows, which makes sense because people are taking profits. Every time you have a move to the upside, people are taking profits. We're not getting that now, though. We're not seeing exchange inflows, okay? Here, we had a peak. So back around this time, this is November, October 2022. This is the bottom. And what happened here? A spike in exchange flows. This is what you can call, yeah, wow. What's the word? The word is, when you panic and you just want to liquidate everything, basically you get...
trading.
I say panic and you're like, yeah, that's
capitulating.
I know. Yes, thank you. Capitulation. So trading. What's that word when you panic? Yeah, it's called trading. Yeah, so capitulation here. This is what you have. Capitulation, and that's
capitulation.
Capitulation.
Capitulation. Yeah, capitulation.
Capitulation. That's yeah, and that happens obviously at the lows. You can see right here. You have the I believe this was the a crash, a flash crash, maybe Luna. I believe this was perhaps Luna, and then you had FTX, but this was, I believe, maybe Luna. So we had massive exchange inflows because people were panicking and they just want to get out of the market. Same thing in the next crash, they want to get out of the market, and then at the bottom they're like, screw this, I'm out, I'm getting out. And then at the very bottom, what's interesting is a lot of exchange inflows, which means a lot of selling, which then means if someone's selling, someone else has to be buying. Okay, this is the public panicking, selling to smart money. So if you would have looked at the commitment of traders report for this period, you would probably see asset managers being long down here, because that's smart money and they're buying. So now we go to current price. This is the current price, and we're actually seeing a steady decline with lower highs in exchange inflow, which to me is just blows my mind.
Bullish.
Extremely bullish. Extremely bullish. What else can
that means people want to hold on to their Bitcoin?
Yeah, because now people want to.
Well, people are speculating that they think that Trump is going to make it the reserve asset.
Yeah. But
dollar, that is just never going to happen, though, is it?
Yeah, that's never going to happen. If it happens,
imagine if it does. Yeah. Imagine. I'd be like, I can't believe I capitulated my Bitcoin.
Yeah. Okay, so what we can do is, so this is inflows. Now, what about outflows? Exchange outflows.
No, just be reversing it.
No, I mean you can have inflows without outflows. You can have outflows without inflows. You know, you can have inflows 1 year ago, and that's outflow. So if you have exchange outflow going up, then this is obviously incredibly bullish. And I would say that you are actually seeing exchange outflow here, which
more
to me is
their Bitcoin into cold wallets.
Yes, it's just absolutely insane. I don't really understand this. So that's one way you can do some analysis on chain. You can also go to
show the Doge chart, please. Come on.
Yeah.
Let's
take a look at that.
Show us just how ridiculous it is. While you do that, I'll show you the trade I got on gold at the moment. That's the trade we got going on gold. Looking at to take those.
Is there someone in the room with you? There's someone in the room with you.
Why?
There's someone there. There's someone there, isn't it?
No, why? I don't know what you're trying to say. Are you trying to?
Someone's typing on a keyboard, and it's not you.
You're about to say something else. No, it's not me. Nobody's in the room. Oh no, Gil's in the room. Gil.
Well, then there's obviously someone in the room. Like that's.
Do you want to see him? I don't know.
Like there's no one in the room. That's funny. Okay, wait, is he? He's. All right, what's up, Gil? How's it going? He can't hear me.
And you got the office. Oh God, got some work there.
Oh right, I thought you had your own room.
Oops. I should leave the camera on the same. I used to have my own room, but now we've got you know the team. You know we've got the more people in the room. All of this stuff in the background is actually Gil's. You know. Gil's girlfriend is refused to allow him to keep all of that in their house, so
I can kind of understand why.
She got him to take it all out and put it in the office, and I looked at it. I was like, "Yeah, sweet. Let's put it here." But he's not allowed to keep it there. But anyway, let's have a look at the Doge chart, because this is actually ridiculous.
So now we know who's the master in that household.
Doge, obviously, Elon Musk has backed Doge from years and years and years ago, and now obviously he's BFFs with Big T, Big E, and Big T.
What? Holy shit! How could I have missed this? Why didn't we buy? Why didn't we buy this? We talked about this.
I told you it was breaking out.
My God, look at that.
And I did not think I did not think it was gonna go that high.
Look at this shit. Look at this. This is just.
I know what you're looking at. I know it's perfect. Yeah. That's how I've been getting.
I mean, we have even had that weekly candle. We even had that weekly candle. We could easily have entered.
If somebody goes back, what was it? 2 weeks ago? Go back 2 weeks ago on the live stream. We talked that we looked like Doge was going. Wow. Doge was going up. Doge was breaking.
God damn it!
What about platinum? What's platinum doing at the moment? Because we talked about platinum. Looked like it was breaking out as well.
Who cares about platinum? What's really? Is this
just have a look at platinum? Oh no, still ranging.
Yeah, this is
still dead.
Yeah. You go from Dodge to this. It's like this is legacy markets. Yeah. This is nobody good. Let me. I want to look at my positions. I got one on Link. I got put another entry on Link. This is where Dodge were trading, but there's nothing happening.
Yep.
And same with FTM, but
we'll see. Dodge. God, I just hate it. I just hate looking at the chart because I had a massive position from the lows back in October. If you put a line in October, horizontal line, vertical, a vertical line on October of last year, sorry.
Wow.
There you go. That's where I started accumulating, and I capitulated. You know when I capitulated. When was it? Because I was on the phone to you. I was on the phone.
I think that was around. I think it was around this time.
It was. Yeah. I capitulated at the lows. I held it. I held it from all of that profit, and I had a big positions. I had big bag.
Yeah.
And I just totally capitulated, and then it just went up, straight back up. What a mess! But I got luckily I still had Solana. I've still got Solana from an average of $50. I got a big.
I read something interesting about the. I'm just looking at the S&P 500 here, and I read something interesting. There's something called the survival based bias with S&P 500. Basically, what they do is stocks that are performing badly, or basically performing badly, gets removed from the S&P 500, and then better assets gets added to the S&P 500. So it has like an underlying function to be bullish. Like it's literally they're building the index to be bullish. So trading the S&P 500 as a long only asset, that there should be just an underlying edge in just the way the index is built up.
That's why people trade it so often.
Yeah, and that reading that got me thinking like, I should probably start trading indices more.
You might want to look into then start to go over to futures.
Yeah. I am. I'm thinking about that, but I also feel like I don't want to be spreading myself too thin when it comes to where I'm trading and how I'm trading. But I'm definitely going to look into.
I think recently, over the last year, my trading's actually come on quite leaps and bounds, just because I spread out the way that I was trading, in the fact that I'm not trying to, on the same accounts or the same assets, do opposite things. Like, for instance, FX currencies, just go into day trading. I'm not doing the swing trading. Every time I try to do swing trading, I just lost. So I just keep in that to how I normally do it, just day trading, stuff like that, and then just position trading on all of my other stuff, or swing trading on. And I just feel now I've just differentiated those two things. I just have such clarity of this is the way that I'm trading on these types of assets, and this is what I'm trading on that.
Yeah, no, I feel like it's definitely understand what you're saying. It's I'm trying to the way I view the markets as a swing trader is not, viewing the markets as a Forex trader. It's more about viewing the markets as getting a general sense of the risk sentiment. And then there's so many different assets that you can trade with that sentiment. And what I like about swing trading and looking at the higher time frames is just the fact that for me, everything's just so much clearer, and there's time to act, and I get easily stressed on the lower time frames. I feel like I don't want to be making too many decisions.
What's your opinion on traders that say you should only trade one pair? Look, if somebody says you should do something, it's an opinion. Again, if you like to just trade one pair, then just trade one pair. Like, it is totally up to you. There's no wrong, there's no right answer. You're different to me, I'm different to Jonatan. Everybody has got their own way of doing things. I personally, when it comes to currencies or CFDs, CFD gold, euro dollar, pound dollar, that's pretty much it, because I don't really have time to go through loads of different other pairs, especially if I'm day trading. All I need is just one or two, see which one's moving against the other, and that's it. If the dollar is strong and I don't know, the pound is weak, then obviously I'm trading that. Or if we're on a risk off kind of environment, I don't know, there's a war or something like that, well, I'm going to be trading gold then. These types of things, and that's enough for me. The rest of the other stuff with crypto and S&P 500 and all of that stuff, those are different parts in trading. For me, it's more passive. But it's totally up to you. You've just got to understand where you are. If you're a intraday trader, if you're a swing trader, if you're a swing trader and you're looking at 4 hours, dailies, weeklies, and you're only trading one pair, you might have like a month where you're only having like one or two trades, or even worse, you may be just waiting for a good trade for ages. That's why you would go and look for other opportunities on different types of pairs. If you're intraday trading, you have movements and areas to get in on one pair all the time. Like, you have too many signals sometimes when you're intraday trading. And let's say you're on the 1 minute, 5 minute, sometimes it's too many opportunities, and you just got to pick and choose which opportunity is best for you. So again, it depends on your environment, depends how you trade.
Yeah, I mean, if as a swing trader, I like having the option of looking at many pairs, and I usually start by looking at the majors, and if I can find a trade setup on the majors with one idea, then I stick with that one. If I can't find an entry, then I, for example, so if I'm trading dollar strength, I obviously want to short everything against the dollar or long the dollar somehow. And if I can find one pair that aligns with the bias, where there's a good entry trigger, technically, I'll go with that pair. But if I would be, I've traded, I've traded every type of style. I've been scalping, day trading, swing trading, position trading. I've tried to trade only euro, only the pound versus dollar, and I think what happens is I always come back to the way I'm trading now, where I'm trading the higher time frames. I'm doing more analysis, because I really like technical analysis, and I really like the strength of analyzing the risk sentiment using different indicators of like shifts in sentiment, which gives me a good bird's eye view of the overall market. And there's some fundamental. I'm not really doing fundamental. I guess it is in a sense fundamental analysis, but it's technical analysis on assets that are very influenced by fundamentals. But every morning I do go through the news. I try to get an understanding of what's happening on the bigger picture around the world. I try to get an understanding of the interest rates, the news events, and so tomorrow, for example, we have a CPI, and I always now that I have positions based on it is CPI tomorrow, right?
Don't know. I haven't checked.
Yeah, it is. It is. So tomorrow we have CPI, and I try to think about different scenarios where. So let's assume that the inflation rate is much higher than expected. Then we're going to see the dollar just absolutely explode. I mean, if the inflation rate is much higher than expected, or just higher than expected, we're going to see we're going to see my positions doing very, very well. If we see that inflation rate is much lower than expected, I might actually have to look at exiting the positions, because then we might see a big move to the upside. So I might, so that's the level of fundamental analysis I'm doing, and it's just simple stuff. But yeah, I think
it's super important that everybody as well just focuses on when you first go into trading, you understand basic concepts, and then when you go a couple of years into trading, you get more advanced in the way that you're looking at things. And I think sometimes it's quite refreshing as well, going back to the fundamentals of just supply and demand, and just how just assets work in that kind of, naked charts with just supply and demand areas, support and resistance, things like that. It can really refresh everything that you're doing. If you feel like you're stuck and you're jumping from one thing to the other thing and nothing's working, then definitely go back to the basics and lock in on those things, because you really can't just be good old supply and demand and support and resistance levels. As long as you understand how market structure works, higher highs, higher lows, what's a ranging market, I think that's all you really, really need. It's when you start adding like loads of different things into your trading, and then that doesn't work, and then you start back testing one thing, and then that works on back testing, so then you start doing that on live, and then it doesn't work, and then you go back and do something else. Really just go back to some of the basic things if you're feeling stuck. I don't know why, because nobody actually asked if they were feeling stuck, but I just thought about saying that.
That's good. I think it's... Do you have any recommendations of any futures trading platforms out there? Not prop firms, obviously.
Futures for crypto?
Not for Forex or for indices?
Just in general futures?
Yeah.
No idea. I don't trade them myself.
I don't think Wanda has futures, right? I don't think they do.
I have no idea.
Probably not. Looking at that, maybe IB has. We'll look at that anyway. Okay, so I wanted to show you guys something else. We've talked a lot about on the live stream here when talking about Bitcoin. We talked a lot about the MVRVC score. So this is also the indicator that is at the bottom of my Bitcoin chart. You will see the MVRVC score, and it's always been on a website called lookintobitcoin.com. But now when I go to lookintobitcoin.com, it takes me to Bitcoin Magazine Pro, which is obviously maybe got bought up or whatever, but it's the same. It's the same layout. Everything looks the same. It's just different name, different logo. But here we actually do see that the MVRVC score is now breaking out quite heavily with price. Obviously, we have quite a long way up, but I do think that between 5 and 6 is going to be the top of this bull run. Now, if you're trading Bitcoin, if you're holding Bitcoin and you're looking to time the top for Bitcoin, I would recommend that you put the weekly 50 EMA on the chart and you look at a weekly candle close below the weekly 50 EMA. If you get that while other things align, that's one of my my top signals, right? That's one of the reasons where I would want to exit. We can look at the net unrealized profit and loss here as well, and I think it's a bit more obvious here what we're looking at. So you see price of Bitcoin in black and then the NUPL indicator in blue. When we enter euphoria and greed, or just the top of this yellow zone, that's most likely going to be the top of the bull market. You see capitulation down here at the bottom, and then euphoria and greed up in the red area. And you'll see that this indicator is very good at timing tops and bottoms, especially this one with the MVRVC score. But if we reach that top, which is it's gonna happen, I believe, in the next few weeks, we're going to hit that top. You're going to see people messaging you, calling you. If they know that you have something to do with trading or something to do with crypto, you'll get messages. You'll have, you'll hear people talk about Bitcoin, people that you had no idea is interested in trading. Like when we reach that level, when it's all about Bitcoin, you sell. That's a much better indicator than price action. Much better indicator than price action.
The last time we had this bull market, this was just around COVID time, my grandma asked me about Bitcoin.
Yeah, right.
I should have sold everything there, and then I'd be like, Grandma, shh, say no more. We don't want to hear about Bitcoin in this family ever again. And I should have sold everything. But I looked at my grandma and I said, Grandma, I know what Bitcoin is. I've got some, and then I held it all the way back down. So there you go. There's a top signal. If your family that have never talked about it start talking about it, that's you start slowly selling it to them. It's not to them, selling it. You don't want to sell it to them. You just want to start
sell it to them.
Exit liquidity. Grandma, you are my exit liquidity. Okay, this is how you do it.
Let's take a look at long-term holders supply.
Okay. The grandma indicator. We should add that to our list of indicators that we have at the 5ers.
It seems I can't click that one. Let's see if I can. No, that doesn't work. We have a Glassnode as well. I'm not sure if you guys are familiar with Glassnode, but Glassnode is another on-chain website. So here you have, for example, the number of active addresses. So you got in black, you have the price of Bitcoin, and then in orange here you have the number of active addresses, which at the top of the bull run, it's usually peaking, as you can see right here. In 2017, you had a massive peak at the top of a bull run. And then at the top of the bull run during COVID, you also had a peak in active addresses. And now we're printing lows. It's nothing like the previous tops, where we're actually printing a low, which is like insane because Trump is promoting Bitcoin. Crypto, it's just probably the most famous person in the world right now is promoting this. There should be more active addresses. There should be more happening here, and I think we got more to come. And I do think that Bitcoin, like before MVRVC score hits my sell zone, before the net unrealized profit and loss hits the euphoria stage, we might hit like 150k Bitcoin. So we have upside potential, huge upside potential before this happens, because Bitcoin starts to move now. And when it starts to move, there's no slowing down. Either it's just going to go straight up. I'm serious. Like, it's probably just going to go straight up, or it's going to absolutely dump. There's no ranging here, I believe. Like, it's just up or straight down, straight up or straight down. Like, it's literally up or the end of the bull market is the way I see it. There's no in between. It's just...
God. Do you know, this is the part, this is actually the part that I hate about all of this, is the fact that you're in some really good positions. You've seen some okay profits. You know there's so much more to come. You're scared that you're going to lose all of those profits. It's just like, it's just a really horrible place to be. You know, it's much calmer being at the bottom and accumulating saying that these are just such good areas to accumulate, and you're not really looking at the charts. To then it starts going parabolic, and you're looking at the charts all the time. Like, my girlfriend hates me at the moment because I'm literally in bed at like 12 o'clock, just like staring
Well,
at my
you're gonna
phone.
be able to buy a new girlfriend. That's the thing after this bull market.
Do you know what? I don't think I can afford one, because you can't. There's something like with this one where, you know, it's the character is just, you can't put money on it, man.
Right, you
I'm just
actually
saying that
like
because
her.
she
That's what you're
watches.
saying.
Yeah, I actually like her, and she's watching this stream, so you gotta behave.
Yeah. Well, you didn't have to say that. We all understand. Now
Only joking. I don't know what's going on with gold. It is just not pushing up. Which, to be fair, I could understand, because I didn't want to.
You went. I mean, you went long on gold. It's yeah. EU is continuing lower. We got pound
so I literally
continuing lower.
I got out. Oh God, what was that? So the trader I had on before, you know, at the start of this stream, I got out on the really good area. I got out here, and then when it came down, I wanted to get in because I was thinking that it was going to push up again to higher to take out these highs here. At the moment, it doesn't seem like it actually wants to do that, but that is at the moment.
I'm currently up 6 R since Friday, I believe. It's pretty good. I'm risking small. I think if
do you know what it is as well? It's because volatility's up. Yeah. And things are directional, and as long as you get that right,
yeah, it's I got these moves. I managed to time them like perfectly. I had my bias, I had conviction in my idea, and I really did capitalize on the idea. I doubled my position when the positions were confirmed. So I really did. I feel like I did everything right here. Now it's the next trade, you know, the next idea that I have, the next bias. I have to be able to. I want to time that as well. I'm gonna really, but it's, you know, it's difficult because when I exit these positions, I'm gonna think, you know, I want to get in new ones right away, because right now I'm just feeling great because I'm seeing that I'm in so much profit. Everything is going well according to my plan, and it feels good being in these trades. When I exit these trades, when I take profits, I'm gonna feel naked, you know what I mean? Like I'm it's gonna feel like I have no open positions. I'm not making any money, so it's gonna be difficult to not take any new positions on unless there's a switch in sentiment. Because now I'm making money on.
I'll be back in a minute. Right? 2 seconds.
Yeah. Yeah. All right. I don't have to stop talking, I guess, because he's gone. Because you guys are here. You guys are here. Okay. So, man. Well, he probably shouldn't have his screen on, should we? Switch to mine. So what I was saying was, I'm gonna manage these positions here. So let's see, what do we have here? First, go to. I'm gonna set up the giveaway link in just a minute. I'm just gonna manage these positions here. So what I'm gonna do is, let's see, we got CPI tomorrow. I don't want to be moving that stop loss on EU. I think EU is in a good position. EU, however, I'm gonna keep GU stop loss where it is as well. Gold, I'll keep my gold stop loss as well. USD CHF, I'll keep that one as well. And AUD JPY, I'll put an alert here if case we move higher. Okay, so I'm not going to be managing the positions here today. Yeah, tomorrow we'll do a giveaway as well. That's right. I'm just setting up the giveaway. I think you have to reach out to support. If you're having problems with purchasing the 5K bootcamp account, you have to reach out to support. I do not trade Nasdaq. I don't trade indices, but I'm gonna look into the option of starting to trade indice futures, because when I'm looking at the S&P 500, it's trading the S&P 500 as a swing trader with only looking for longs. I think at this time around in this bull run that we're most likely going to see, I think it'll be awesome. For my swing trading, the way I'm trading these setups that I've showed you today, I don't have a risk to reward ratio. I don't really look at risk to reward. I'm just looking at specific levels where I'm exiting. It doesn't matter what the risk to reward is of the trade. When Bitcoin hits the highs, I will sell, and then I will look to enter a short position. But I believe that when I sell and when I open a short position, that will be the start of a bear market, and that bear market might be we might be seeing downwards trending prices for a year or two. So I'm not going to be looking at buying the dips. I'm going to be looking at timing the top of the bull market, which means riding the bear market lower. No, that's selling actual Bitcoin. Selling all my Bitcoin position, selling all my spot, and also taking a leverage short to hold for a long time going forward.
Yo.
Okay.
Ooh. Isn't it nice when you go off to have a break and you come back and your position's actually starting to move?
That's nice, yeah. I'm just setting up the giveaway.
And then it just comes back and doesn't do anything.
Yes, I'm in AUD JPY long. I can break that down. So if we look at the weekly for AUD JPY, obviously we remove everything here. We see that it's an uptrend, and we go back into the daily. We have a double bottom and a W structure on the daily, reclaiming the neckline of that W, and then creating what I view as a accumulation range above bullish structure in an overall uptrend. And I'm thinking that will reach these highs right here. So this is basically the move I'm looking at: up move, down, double bottom, break and retest. And here the break and retest is the accumulation range here. I'm going to be adding the giveaway link in the description of the video. I also see that the description of the video I'm talking about Anastasiia, that's obviously for tomorrow. I have to change dates, but obviously I did not change the description. Whatever.
Guys, what do you think about Pakistan future? Never traded Pakistani futures. Yeah, no, never traded them.
Pakistan future, what is that?
No, it's just futures, I guess.
Like you're talking, like you should probably have to be a little bit more specific. I don't know what we're talking about.
Oh, we got the giveaway.
Yep, got the giveaway in the description and the got the pinned comment there as well. Maybe it means trading the future of the country. I don't know. Probably not. Well, there is. I mean, obviously, there's a Pakistani future contracts mercantile exchange, but I think it makes sense for me to trade that.
Depends. I'll trade anything.
I mean, it depends. I mean, the emerging markets can have quite insane moves, you know? It's like the low caps of the Forex, you know?
Look, if it can be put on a chart, it can be traded.
Oh yeah, definitely. Take a look at it. The Pakistani water and power development. Yeah. Peculiar chart. Pakistani rupee. Is it rupee? Versus the euro. Look at the monthly. Okay, now this is an accumulation range right there. This is insane. This is actually interesting. This is a currency. This looks like an altcoin. This is insane. Okay, so it's probably Euro PKR, right? Yeah, it's. I'm not sure which is the base pair here. It's probably the Euro EKR. That's probably the base pair. Should be correct. So, I mean, this looks like it looks rather insane. I mean, if we break these lows, I would definitely think that this is some sort of distribution.
I might just capitulate on this gold trade.
Like... This looks like an altcoin, doesn't it?
Is that on the weekly?
Yeah.
Yeah, it looks like it is that inverted right now?
No.
Oh, it looks like it's going to come down.
Yeah. This is the euro versus the Pakistani. Is it rupee? Rupee?
Is that a gap as well?
No, it's just fat candle. But that's just a crazy move right there. So I'm just gonna put an alert on here. I don't know where I can even trade this.
We'll just wait for a break and retest top of the range on a weekly time frame.
Yeah, this is crazy. I mean, I wonder what this move is in percentage. Yeah, that's 16%. That's like trading is on stock market. It's crazy that this is actually
16%. Yeah.
16. Yeah, that's 60. Interesting though. Definitely gonna put that. I'm not gonna trade this though because I didn't even know where.
What's the interest rate for the Pakistani rupee?
Okay.
Why we're going into this? We're not going to trade it.
Pakistan.
We are definitely not trading it.
Okay, so it's PK. It's PK. PK10Y. No. I need to look up what the
Maybe we should
ticker
try
is.
Day trade it on the 1 minute. Oh god.
I'm looking up the ticker. Okay, so it's PK10YT. Let's see. PK10. I can't find it though.
Yeah, I guess we can move on.
Yeah, let's move on.
There you go. Interesting chart though. Never really looked at it. Interesting.
It is quite interesting. Okay, so S&P 500. Now let's look at this. It's just it simply is it goes up. Okay, just most of the time it just goes up. So applying a long only strategy. And by the way, look at that weekly retest right there. It's just beautiful. So I mean, when the S&P 500, if it comes down and retest this level and prints just a bullish candle on the daily, I would be very interested in opening a position here, basically trying to get in on every bounce on the daily chart for the S&P 500. Oh, he's asking us about the future of Pakistan.
Wow.
Yeah,
I can't even tell you
one.
the future of the UK, and I'm British. So
yeah,
I don't know how I'm going to tell you the future of Pakistan.
Yeah. No idea, man. Up. Gonna go up. Prosperity, wealth. That's what I believe. Oh man, I don't know. I'm getting tired. I feel like you can only do so much analysis, and then it's just now we start talking about trying to look for the Pakistani government bonds, which I can't even find.
It's like, oh god, I'm not even going to go into this conversation. Could take it in so many different directions.
Yeah,
the stuff that you do when you're bored.
Okay, Bitcoin.
Let's just get
We're seeing
the giveaway and
yeah, let's just do the giveaway. Let's see how many are in on the giveaway. You've got 122 people. I'm going to give them a couple of minutes. We have the link in the description.
I mean, we have the North Pole futures. I think it's going to be cold.
Yeah.
But I think it's hard to tell what we will eat later. Yeah.
I think it's hard to tell even it's hard to even tell what we will eat later.
Yeah. It's hard to tell what my mood is going to be like later.
Not really. I mean, depends on Bitcoin, I would
say. Depends on what this next trade does.
Yeah.
So my girlfriend asked me, "Oh, how's your day?" And then I just lost, all day, and I'm like, "Yeah, it's been all right." No, deep down inside, I'm gutted.
My fiance, like, some days she looks at me, it's like, trading's not going well, is it?
Yeah, you need a very supportive partner, because they act like psychologists, and also
I'm like, my fiance, she supported me from like when we had nothing. Like when I started with this, I was just obsessed. Like, I can't believe she stayed with me. I was just looking at lines on the chart, and I was not making any money. I was just sitting at my computer. I was not like gaming or doing anything like that, or like playing poker or shit like that. I was just drawing lines on a chart. It's like, how's it going? You're making money? I'm like, what do you mean? We're losing money. Wow. And then it just said click,
Everybody should go over to RLZ YouTube channel and go on to Jonatan's oldest video and just look at the baby face he used to have.
Have you done that?
I actually have done that, yeah.
Wow.
I've gone on. I went all the way to your oldest videos when you were talking about crypto. That was
shit, man.
Gotta be done, I'm trying to start my own YouTube channel. I need to check where everybody started. If you go to my YouTube channel now, it's I got one video there that we uploaded a couple of days ago, which is just random with a phone. Just gotta start somewhere, isn't it? I needed that
I remember when I started, I had like, oh man, you should see in my office. I had like I didn't have any money. Like I honestly, like I made some money on crypto, but everything I made got reinvested into crypto. So I didn't spend any money on equipment, the cameras, and anything. And I had like one very small screen, right, and an old desk and like old chair and everything. And then with time, it got upgraded and upgraded and upgraded. It's pretty cool to see the development.
That's a beautiful thing as well, with consistency and just keep going at it, that eventually you start getting better and better and better and better.
You guys are asking, you're asking for the channel name. Now I don't want to be advertising it here, but you can just Google my name. If you Google my name,
stop being weird, man. Just put the channel in there. Nobody's gonna know. Just put the channel. Channel. If you guys want, you can go on to my channel as well.
I'm gonna put the channel in the chat. Go.
There you go.
Do not watch my first videos though. That's weird.
If you guys want to be really nice and you want to see what's going on in Yo Soul. If you want to go on to Alex Unfiltered as well, that's my YouTube channel. It's got one video on
really? Alex Unfiltered?
Yeah, you're gonna have to try and find it though.
I feel like that's not something I want to be Googling though.
Alex Unfiltered.
There's a lot of Alex Unfiltered.
You gotta find this Alex Unfiltered. The users only Alex Unfiltered or something like that. I don't know.
So you're gonna do like you're gonna. Of course, I'm getting like type in only, and I'm not gonna say what I get up. There's nothing, man. There's nothing. So what are you gonna do? You're gonna do like random. You're gonna be a proper influencer. You're gonna be like sitting by the pool, taking model photos.
I was more likely going to just do more about trading, more about what's going on in the 5ers, what's going on in the prop industry, what's going on with the new project that I'm running at the moment.
Nice.
And that is it. Why don't you want to watch the first video? You're ashamed early steps. You can watch the first video. The first video is literally like 2 seconds long. It's just me with my phone like this. Let me pull it up since everybody's gonna start taking the mick out of me for not showing.
I think they're talking about me.
Oh, they're talking about you.
I'm not ashamed at all.
Gold where you bought.
Great.
What? If that's Alex.
I'm selling gold. Yeah, good.
If that's where you think you should sell, just watch for the equal highs right now because they're about to get raided. Alex, Jonathan, what's your height, guys? I am. Do you want to know what I tell people, or do you want to know what the real height is?
I want to know the deviation between the two.
You want to know the spread? The spread between the.
Yeah, what's the spread?
My spread is.
If it's more than 5, you're yeah, that's not good.
No, so I say okay. I have I do about 5 spread. You know.
Really, that's.
Oh, actually, no. I do a 7 spread.
So how tall are you? How tall are you?
I'm 172, 175. I say I'm 179.
So you're pretty almost.
Well, you know, it depends. It depends what shoes I've got on. Depends how much, you know. Yeah, I'm pretty sure.
Well, you got the face. You got the face. I gotta give it. You're not.
I said maybe I'm on 175.
Did you post that, or did you post that link?
I did post that link. Yeah, that is my.
Oh, nice.
– 20 years old and starting YouTube. Oh god, this is embarrassing already. 6'2". Now what a flex! Now you can't be flexing on us like that. That's really not. That's bad, man. Can't believe.
Guess how tall I am.
2 foot.
We're not from America, you know, so it's like.
Do you know when I went to Croatia, I was like the size of the average woman there. I was like probably under the average. It's like even the women were taller than me.
Wow.
Oh gosh.
5 feet. How much is 5 feet? Yeah, I'm slightly over 5 feet.
So hold on a second. If you're saying slightly over 5 foot, then we're the same height then, pretty much.
I'm officially a midget. So I actually, in Sweden, if you're shorter than 5 foot, you get like special needs money to redo your kitchen, like to make it, you know, smaller. I tried.
This is what happens. This is what happens when we've got no trades and the market's not doing anything. And wow, I've got 1 extra view on my video. So whoever that extra viewer was, what a legend! Now I've got 2.
Yeah,
views.
I'm 180 centimeters. I'm not 5 feet.
I'm 180 centimeters. Okay, it's nice to know that my trade is gone. I think this is no, I think it may still have a little bit of. Let's have a look where we're at.
Yeah, 6 feet. That's right, 6 feet. But are you like in the UK? You're not. Are you measuring with your feet over there as well?
Yeah, well, I don't take them off.
No, I mean, that's not what I asked. I asked if you were using the metric system or not.
Ah, what you said? Do you measure yourself with your feet? And I'm like, no, it depends. You measure yourself with your feet.
Oh, we gotta
Yo,
get
Alex,
in this.
that's the
We gotta
open
end
comment.
this.
Let me declare myself first. Yo, Alex, at least open the comment. Let me declare myself first. Oh, you're telling me you've commented on the video as well?
Well, thanks for the follow, guys. I almost got 2K subscribers now.
No, I can't believe it. I have just got 9 views on my first ever video. No comment.
Nice.
But our comments are turned off. I see I'm so newbie when it comes to YouTube. I don't even know how to turn comments on.
Americans can use washing machine as measurement units. Yeah, it's like there's stones, there's feet, there's sticks, there's I don't know, like there's so many different things you can measure with. Thumbs.
Thumbs up.
Okay, let's do the giveaway.
Yeah, we're talking absolute nonsense right now.
Views are increasing though, so I guess they really want to know how.
Imagine the people that come on just for the giveaway and they just hear that we're measuring each other. It's like, how do you measure yourself? You know? What?
Yeah, that's.
How do you turn comments on YouTube?
I don't know. Never disabled them. Probably settings.
Probably. Okay. God, I've been getting absolutely murdered today.
Okay, yeah, I'm... Do you know why there is no correlation anymore?
Between?
I feel like there should be something more to that sentence.
Yeah.
But it's probably because of Trump. Okay. Let's do.
Wait, hold up. Before you do it. Yeah.
Eduardo. C. Eduardo. That should be correctly pronounced. Congratulations. You've got an account. There we go. Thanks for joining us here today. Tomorrow we're going to get Anastasiia to come on. We're going to be talking about trading, you know. We're going to be talking about... I'm going to see if she can share some details of that hope analysis once again. Very interesting analysis. I'm going to see if I can perhaps implement that into my own trading as well. And of course, we're going to be back with the giveaways. We're going to be back with updating you on all the positions that I have open and all that fun stuff. All right. Thanks for joining, everyone. Hope to see you all tomorrow. Take care. And yeah, see you tomorrow.
See you later, guys.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.